let's talk about the stocks on my list. I'm starting with Mahindra and Mahindra. Why is that? They've launched 2 new electric vehicles in the SUV category, so it's a decisive entry into what is a fairly competitive space. The names of these vehicles I found are very interesting, almost like some of Elon Musk's children. XEV 9e is priced at 21.9 lakh rupees. BE6E is priced at 18.9 lakh rupees. The stock has run up a fair bit, but why am I saying it's a thumbs up? There are 2 or 3 notes, some contrarian view. Nuvama, in any case, has maintained a buy, has set a target of 3,700 because they're saying the new dedicated EV platform scores over peers on features. Major features include large battery, fast charging capabilities, etc. Bookings likely to open from Jan 25th and deliveries from end of Feb 2025. So Jan 2025 is when bookings are likely to open. The initial annual battery EV capacity is at 90,000 units and built-in battery EV volumes at 48,000 units for FY26 estimated. It remains one of their top picks. MK on the other side has retained a reduce with a target price of 2,700. They're saying the EV launch is impressive, though the category adoption is gradual. Strong features and competitive pricing. Prices below current top-selling models in targeted SUV segments. The EV category continues to see slow offtake with low single-digit penetration. But the reason why I think M&M will be a thumbs up today, or maybe because of this news, even if not today or in the first half of the morning, is because you, in the passenger vehicle segment, you had one player and one EV which was dominating. If you have another player well priced with the right features, will it also grow the market is the question. Like I said, auto in focus today, Ola Electric. Thumbs up is what we're giving it. They've launched India's cheapest electric scooter aimed at the gig economy. Now, this is a stock which has had a tough time. They've had a tough time overall. Yesterday, the stock ran up about 3 rupees 84 paise, so about 6% up. But you might see a further upside today because of the kind of scooters that they have launched. They've also already hinted at their battery launch very quickly, and they have a gigafactory there, which is in the making. So you might just see an upside for Ola Electric after a bit of a downturn. And let's talk a bit about on Hyundai as well. So I'm adding this, that's why I'm saying auto in focus. JP Morgan has initiated coverage on Hyundai Motor India with an overweight rating for 2,200 rupees. That's a 17% upside. Again, an IPO which was not living up to its expectations at all. Their premium portfolio market share gains and operational efficiencies are key drivers, according to JP Morgan. 68% of their portfolio comprises of the highly profitable SUV segment. Market share is expected to increase from 14% in FY25 to 15% in FY27. And the FY24 EBIT per vehicle is at 89,000 rupees. That's a 43% premium compared to peers. That means income per vehicle is 89,000 rupees, which is much higher than their peers, which is why JP Morgan likes Hyundai or Hyundai, however you want to say it. But just one more stock I'll talk about, and we are all main board today, is Infosys. And this is a story actually that we will have more details of, broken by our very own Haripriya, our Bengaluru reporter. It's a thumbs up for Infosys because they've issued 90% variable pay for Q2 FY25. The bonus rollout for junior and mid-level employees, variable pay for Q2 is higher than 80% provided in Q1. The bonus was issued on November 26. Now, why is this important? Because if the market leader in that sense, one of the big 3, is paying out their variable component, that augurs well for the deal pipeline that they see. And anyway, I think IT is going to be in focus once again. Infosys, LTI Mindtree, because they had an investor day. So these are some of the stocks that you should watch out for.
I'll add a few more, Tamana, to your list of counters that we are tracking. So, of course, IT and auto become important. Bank Nifty is always important in terms of contribution to the index. 24,350. If you've got to do that, you've got to see some sort of positive traction on the sectors that we just mentioned. In terms of other stocks, this is one of the last few companies that are reporting earnings. Siemens reported numbers, and those numbers were actually good, so this counter could see an up move in today's day of trade. And of course, with capital goods, infrastructure seeing a little bit of an uptake and risk on trade for the last few days, it could be a decent morning in that sense. Revenues were up 11.5% for Siemens. EBITDA was up 34%. Margins have also improved substantially now. They've come in at 14.5% versus 12%, and net profit has seen a significant jump of 45% to come in at 831 crores versus 572 crores. Now, I know Siemens is an expensive stock when compared to it, but actually the whole of the sector really remains expensive, with the likes of ABB as well trading at a massive premium. So no different for Siemens, where the numbers are pretty good and in line with what the street was expecting. The board has also approved an additional investment of 100 odd crores in power transformers factory. So that's the other news flow. And of course, as we get closer to market opening, the brokerage notes will roll in on what they make of Siemens earnings. Well, NTPC, we've already talked about it, of how it's all eyes on the NTPC Green IPO that will list shortly. The grey market premium is indicating to a flat start, but what is important to note is last evening, which is a day ahead of NTPC Green making its debut on the exchanges, they've incorporated Mahagenco NTPC Green Energy, which is a 50-50 joint venture between NTPC Green and the Maharashtra government for development of renewable energy projects. Now, what is this going to do? This JV will be engaged in business of developing, operating and maintaining renewable energy parks in Maharashtra, and they will allot parks for development of these of renewable energy. Remember, India has the 4th largest installed capacity in renewable energy in the world, and of course, from what we understand, Maharashtra is gearing up to play a pivot role in India's energy transition, and this comes in hours before the company actually lists on the exchanges. So watch out for NTPC Green, and NTPC being the parent company of its subsidiary listing. Well, the other one that I want to highlight, because we talked about this for the last few days, is GE Vernova. The promoter did exit 5% stake in the company yesterday. They had indicated that they would or may look at exercising the green shoe option. From what we understand, they will be exercising it this morning and selling an additional stake of 2.91%. The stock had its lower circuit on back of that yesterday, but remember, this additional 2.91% continues to sell at a discount of 15.50, which means the stock on the get-go this morning could see a gap down. So those are the three that I have. Siemens are a good set of earnings. NTPC, of course, is good news for the new listing company and the parent company as well. And it's, of course, promoter selling stake in GE Vernova that will keep the tab in terms of gains and, of course, see a gap down on that stock, Tamanna.